Well, good morning and good afternoon, and welcome to NinjaTrader Live. I'll be your host, Tom Schneider, CMT, with this segment, which we call Traders Workshop. Traders Workshop is where we like to bring in our NinjaTrader ecosystem partners so that they can show you what they do and impart wisdom that way. And today we have a returning guest. We have Calvin Harris, successfutures.com, to talk to us about some really interesting stuff. How you doing, Calvin?
Hello, Tom. Good to be back again. It's great
Oh,
that session.
it's
Yes.
great to have you back. How's everything over across the pond?
Wow. Well, we got good weather today. Some parts of Britain has been flooded, but where I'm from, we got good weather.
Oh, that's great. There's nothing like being in London when the sun is out and it's warm. I was in London last about 6 years ago for a wedding, and it
Yeah.
was just the most beautiful weather. It was sunny, it was warm. It's nothing like what they tell you about in the books and the magazines and the TV.
Yeah. London is a little different to the rest of the UK. We have the best of the weather.
That's That's good. Well, so let's talk a little bit about you and Success Futures. So maybe just quickly recap how you got into the markets and what Success Futures, kind of your specialty at Success Futures.
Right, Tom. Well, as I said before, I've been in the game over 12 years. Started trading Forex. Options was the very first thing, then moved on to Forex. And then that drove me into futures. And when I got into futures, I started seeing a different aspect of the market. I started to see where volume and interactions between buyer and seller made a lot of difference to the way I was looking at the market before. So yeah, I developed that route and came to footprint charts, Tom, and I found footprint charts was something I really liked, and I found a lot of different ways of looking at it. Then I started integrating it with some of I think NinjaTrader came along with footprint charts a bit later, but what I really liked about the NinjaTrader charts was the volumetrics, and I started looking at that, and that allowed me to look at order flow from not a from a granular point of view, but not as granular as, say, the price ladder, and where you're able to, with the volumetrics and the footprints, you're able to retain a lot of the information that the order flow has produced. And then you can then place your trade from the DOM using the very last bit of the granular. So Success Futures, Tom, has a speciality in the fact that what we focus on is trying to get traders to understand how the market works, and that the way that it works that is going to be beneficial for you. So that's when we start looking at interactions and how Delta plays a big part in uncovering some of the hidden edges that you'll find in the markets.
So Calvin, listening to you talk about your journey into the markets and finding futures,
Yeah.
one of the things I think that you mentioned is really a benefit to futures, and we try to highlight those benefits because a lot of people come in like you did through the equities market, or you came in through the options market, and then got into foreign exchange and then got into futures. But you don't have, especially in the foreign exchange market, you don't have the transparency as far as that order book, right? That
That's right.
the entire data that or the data set that drives these charts that you're talking about, um, you don't have that transparency. So, that transparency in the futures market gives you, I think, what you're talking about, which is the insight into maybe some information that gives that's hidden, quote unquote, but it gives you that kind of benefit of making better informed trading decisions if you know what to do. And another thing you said about the trading ladder, which you have an example of here, the trading ladder is fluid, right? So it's constantly changing. What
Yeah.
I like about the footprint charts with the data visualization is it kind of takes some of that fluidity and in a way uh, um, summarizes it with some data visualization with some coloring, the yellow coloring and all of that. So I know we're probably going to go into that a little bit, but yeah, there's a lot to unpack in what you said.
Yeah. 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 Certainly. You know, when I first started looking at the order flow from the price ladder point of view, it became a full-time job.
Hmm.
So you're trying to figure out the nuances between these little minute changes in velocity and liquidity all at the same time. And that takes some work. Um, what I found with the footprint charts is that that same information is there and you can store it one side and you can come back to it later and use it just as effectively.
Yeah.
Yeah.
Yeah, I agree. I mean, that's I'm not a numbers guy in the sense that I don't like a barrage of numbers thrown
Mhm.
at me, and I have to make sense out of them. And you're right, as far as the trading ladder, it does take a little bit to read it. You have to know kind of what the situation is. Are you in a high volume time of the day? Are you in a low volume time of the day? That might
Absolutely.
have different effects of, to the numbers that are stacking up either side of the bid or the ask. So, you know, and each market is different, right? So,
Yes.
the numbers on the NASDAQ might be single digits while the numbers in the bonds might be thousands, right? And you got to figure out, well, what does this mean in terms of volatility, in terms of liquidity, and in terms of movement?
Yeah.
And you're right. That's digesting all those numbers at once. It's intimidating for sure. And I think it takes a long time to master that. Whereas the footprint charts, I'm not going to say it's a shortcut, but it does seem to summarize everything and allow you to put your arms around that data.
Definitely. Definitely. I mean, we we have like a situation where a lot of traders rely heavily on technical analysis, and because of that, I think the drawback with new traders is that because of the introduction is first is technical analysis, which is comfortable, and you can see that it works quite easily. And what happens then is that when it doesn't work, a lot of traders like myself, we try to find an excuse for it. So rather than saying, well, over time it will produce beneficial results, what we're trying to do is shoot on it so that it works now and it works all the time. And that's never going to work. It's not possible.
Right.
So you get this constant tweaking and tweaking and tweaking. And then when you've done that for a long time, being introduced now to footprints is such a different format because you don't really tweak anything with order flow. You just learn it better. And so it's being able to transition from that method of doing things over to the order flow style, which is primarily numbers driven. But I think it's a fair of seeing all these numbers and not being from day one learning how to use it and knowing that it's not really intimidating.
Hmm.
The first thing that I learned about these numbers, Tom, was that I remember this guy said to me, he said, think of the numbers, they exist whether you like it or not. Behind the colored candles, they're there anyway.
Right.
And just think of order flow as looking for the lady in the red dress. So everyone else is in gray, and you're looking for the lady in a red dress. So that just makes it so much easier. It's just as easy as technical analysis, really. It really simplifies it because you see all these numbers on the chart, on the footprint or on the DOM or anything, but you're only looking for a specific number. You're looking for the lady in the red dress. And that's what makes it really easy because then a lot of numbers can just go past you and You don't get bogged down with them. You're looking for certain patterns in the order flow. And that's where a lot of people don't realize that a lot of the numbers, they're part of the game, but you're only looking for the main player. Yeah.
Right. Right. It provides a lot of information that might be usual, right? Might not be
Yeah.
unusual. It just said this is the way it is. And
Mm.
what you're saying is, well, look for what's unusual that might indicate a change of something, or look, this looks normal on the chart, on the price chart, but
Yeah.
there's something drastically different in the order flow data, whether it's on the footprint chart or in the table below. Can you explain that table below, by the way, Calvin?
Yeah. Right. So what we have in this table is at the top, we've got volume. So I usually just have that as standard. So that's a volume for the amount of volume or transactions for every candle, these 5-minute candles. So that's pretty straightforward.
Mhm.
But then we come to the others. We've got the next 4 rows. They are delta. They're all different types of delta. So this first one here, if you look on the right, you'll see it says delta bar. That's the delta for each bar. And the delta is the difference between the buyers and the sellers. It's the difference between the aggressive buying or the aggressive selling. So that gives us our totals there. Then the other one is cumulative delta, which is all the aggressive delta, each bar added to each one during the session. And then we have these ones I find very, very important for my trading, which is Delta SH and Delta SL. And believe you me, Tom, they took me years to figure out. Yeah. So Delta SH is Delta since the high, and Delta SL is Delta since the lows. Now, what's very important about these two deltas is that the first delta, the delta bar, kind of peels away the underlying activity in the market. So, you get the total delta for this bar coming down, which is like 374, Tom.
Mm-hmm.
But within that, you've got more than that in aggressive behavior from the sellers of 385, which was right from the top. So it's delta since the high. So you go to the high of the candle and you see 385 sellers have been very active since the high. And when we get to the bottom, we see delta since the low, only 3 aggressive buying has maintained that aggression since the lows. So that at that point, you think, well, the buyers are not really having an effect at the lows. So the next candle, I don't need to come out of my trade, even if this candle was to end a little higher up. I wouldn't need to worry about that because the buyers, although they've tried some aggression, it's been very weak. So I'd expect a continuation, and that's where we get this big move down because the buyers have moved out of the way, they're not there. Yeah. So
And
that's the importance of those two deltas.
And so just to clarify, the delta since high, delta since low is
Mhm.
for that bar only or that candle only, right? It's not the high of the day, it's not the low of the day.
That's
It's
right.
encapsulating that data, right? So it's falling in line with the rest of that column, right? It's the volume for that candle. I'm just looking at any column. The volume is the total volume. You've got the delta. Is it more negative or positive? In a downtrend, we would expect more negative than a positive, but not always the case.
Mhm.
And then delta since high, what you're saying is since we hit the high, it's been sellers outnumbering the buyers by a lot, right?
That's right.
And
Yeah.
then not a lot of buyers. So when we hit a low, buyers didn't come in. So you expect continuation.
Yeah. So if you look at this candle now, Tom,
Mm-hmm.
you can see that we had a lot of activity from the sellers at the highs, 385, then slowed down a bit with 138. Now there's only 58 from the high of this candle.
Mm.
But from the low, we see that buyers are coming in a little bit more aggressive, not as much as back here at 112, but a lot more than 3 and a lot more than 0 from the lows. So now we know that there is a transition in the way that the market is behaving. we now are looking to buy this market because we could see the buyers are stepping up. So they tried before, didn't work out, displayed a weak number at the end, but now the previous candles showed us that over the last 3 candles, the buyers have stepped up quite a lot. And so you're now looking not to sell this any further. And you can see what is happening now. Buyers are coming in more from the low and trying to bring this thing back up. So although it's fluid, it's giving you really good information as to the underlying behavior that's going on.
Right. And I think you made a very good point. It's fluid, right? So when we think of volume numbers, generally they're increasing numbers, right?
Yeah.
But not so, because this is the difference. This is the
Yes.
delta. So these numbers are changing all the time during the candle that we're trading in, right? While we're
Yes.
live.
Yeah.
Um, Boy, I had a question for you and it flew out of my head. We are looking at crude. So
That's right.
these delta
Yes.
numbers, and I think it's a 5-minute chart, right? So,
Yeah.
um, these are what I like to look at delta, the order flow, cumulative delta study for, and it's kind of related to this, is inflection points, right? When there's
Yes.
divergence, and that's kind of what you're saying here. Um, but it's really not so much divergence always. It's really about what's happening in the market. Like,
Yeah.
what is the behavior? We can see price and we can know what price did, but we also kind of get a sense of who did what. And if you think about it, just for those of you who are new, when you matched when a buyer is matched with the seller, just by definition, it's not just Calvin and I get in a room and I say, "Are you buying?" Yes, I'm selling. Okay. It's more like Calvin has a price he wants to sell this crude at. Maybe it's 71.50 or 71.30. So he puts an order in. That's a limit order. This is the price I want to execute this sell order. And then I come in and I say I want to buy. And if the market's near his limit order, if it's at his limit order, that's what this price is. So that would register as a green buy, right? That would, even though there are a buyer and seller for every trade, one side of that equation is somebody who has a resting order, and the other side of that equation is somebody who just hits the buy button or the sell button. And that's what we're calculating here. I just want to
Yeah.
clarify for those who might be new to this idea of order flow and cumulative delta.
Yes, Tom. That's right. I think a lot of traders misunderstand when we talk about delta and when we talk about someone buying or someone selling. What we're looking really at is the aggression, and it's who's hitting who and who's lifting who, and
Right.
that's the key. Although the passive orders make a difference when we're talking about absorption, but still, a lot of traders don't understand that it takes place because someone is willing to do something while someone else is willing to sit back. And they're the key drivers of the market, how that behavior takes place. Yeah.
Right, right. And it's emotional, right? It's
Mm.
aggressive buying and aggressive selling is more of a something that I see that says, "Oh, I have to participate." Whereas, like you said, somebody sitting back has a calculation, whether it's in their mind, just I don't really need to sell right now. I just want to get this price for it. I've got a longer term view. I'm not married to this contract. I could give it, or whatever the reason is. It's not an emotional decision to put
Mm.
a resting order in for the most part.
Yeah. Yeah.
So we're looking at crude. I thought maybe we could take a look
Yeah.
at gold, because gold, we've got this interest. We're past I think the last time you were on, we were talking about the Fed going to announce. Now that we know they've announced, and some of the behavior is interesting to us. This, to me, gold is very interesting.
Yeah. So right now, you can see over the last half an hour, nothing's really been happening in gold. It's been really just range bound. But if we was to go back a bit, we can see there's been a little upturn in the market. From yeah, from about 2 o'clock,
Mm-hmm.
we get this upturn in the market. It's what I call grinding its way up. And I think what I like to keep an eye on, Tom, is cumulative delta. So if you can see, we've got this cumulative buy pressure. And what I like to do is this bit here, this inflection point you like to talk about here. What I like to do there is I will find that candle. Yeah. So we're looking at gold now, and we've got this change in cumulative delta. And I like to do something like this to get my area with that. So I get a region marker, and I mark it from the top to the bottom. So sorry, that one's marked the wrong way. So where we've got the change is to the sell side. So sellers coming from the top, and then we go, I bring it up to where the seller got pushed back. So that would be my range. And if I go take that into the present moment.
You probably have to scrunch it up a bit, right?
Yeah. Right. You can see, so if we go back to here, you can see where the market sits on that cumulative delta, and it just doesn't want to go below it. And that was where sellers were coming in. But if you notice that didn't last long.
Yep.
We'll switch back to the buying. And then once we switch to the buying, you then move this back to this candle now for this inflection point. So that would go like that. And then you can see how that level holds, and the market is going back to the upside, and you get that confident with the sentiment. In terms of gold, we've been going to the upside from earlier on, and when we got that negative cumulative delta, it was time to see, do continue going down. Once we switch back over, I think all the buyers are saying we're back on again, and that's where we're going with it.
Okay, so we're in an uptrend for today. We're probably trading near the highs of the contract, right? Like all-time highs, right?
Yeah.
At what point, from this view, looking at what we have in the matrix below,
Yes.
would you consider weakness? Now, I know cumulative delta is at 672. It's positive. So is it a switch to the negative? So a negative cumulative delta would take a pretty big influx of sellers to do that.
Yes.
Is that what you're looking for? Or is there something else that might say, hey, you know what? There's a little bit of weakness in the buyers coming in. Maybe
Yeah.
we should pay attention to gold.
Yeah, I think this is a really important candle now. If this candle continues with the sellers, so you can see the sellers from the eyes, the delta since the eyes, has been pretty strong there. Yeah. So what you're looking for is this candle to close like that with that strength. So it doesn't really matter about that being, a hangman or upside down hammer. It really only matters about the interaction. Is this number going to stay strong? By the time this 5-minute count, we've got 13 seconds. We're looking pretty strong. So if you look across the delta since eyes, it's been a while since we've been 200. That's when we got to these eyes, and the market tried to absorb the buyers. It didn't work very well. The buyers haven't really got anywhere. And so that's giving us a clue that this is looking to go back and target at least this cumulative delta level down here. So if I was looking to get a trade, I wouldn't be looking to buy any further, seeing that's finished quite strong. I'd be thinking maybe I could get an opportunity to trade down to this level now. So,
interesting. That's really cool.
That's the way I interpret these datas.
Wow. That's fascinating. I like seeing patterns, or I like seeing um, something that is known and not known. It's not a rule. Maybe it is a rule. Maybe it's a pattern, whatever you want to call it,
Yeah,
that might result in something that you can say, wow, I did that, right? I discovered that, or I saw that
yeah,
before it happens. And of course, we just have to say everything with everything we do, especially technical analysis, but also this analysis, past performance not indicative of future results. But um, that's why we have stops, right? You might see
yeah,
something and it doesn't go your way, and you have your stop in, and you
yeah.
live to
Training
play
manager.
another day. But
Mm,
I love that. That's great.
yeah.
Um, Calvin, we've run up against time, so we're going to have you back on, of course. Where can people find
Brilliant.
you?
Yeah, so I'm at successfutures.com. You can email me, Calvin at successfutures.com. And if you are lucky enough to get access to NinjaTrader, you can find me you can sign up to the webinar. I'll be there on Thursday,
Oh, great.
doing delta analysis. So, yeah,
Love it. Love it. Yeah. So sign up for Calvin's webinar. You might be able to find more information about that at the ecosystem as well.
that's
But
right.
certainly check out Calvin's website. I'm sure there's more information about that. Calvin, again, it's always too short, but thanks for all your information here.
It's a pleasure, Tom. Love being here today. Thank you very much.
The following presentation is for educational purposes only. All the symbols, trading ideas, and market commentary are for educational and demonstrational purposes only and are not recommendations or trading advice. Live sample trading occurs in a simulated environment. Past performance may not be indicative of future results. All the information and content presented is provided by NinjaTrader LLC, and the opinions expressed by all third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.